Is it possible with the levels that we're at today that we kind of get a repeat of what we got at the end of the dot-com bubble?
So yes, we see this, the blockchain and these currencies as big delayering mechanisms for the economy.
Like a mini bear market recovers in 3 months, rather than the standard Bitcoin bear market, which is like a 9 months or more. You can even go back to January 2020, right? First quarter, we had that COVID scare, and like this thing went down like crazy. And I think actually the markets, there's a bit of a hangover of that, right? You know, I remember seeing on-chain accumulation happening all through that COVID dip. And it was a wicked dip, right? 10,000 down to eventually below 4, I think, on BitMEX. A lot of people were scooping up coins as an inflation hedge, and as it turned out later, and that it led us into 2021 of this explosion. Different game in town and different players in town. You know, that brought in very high net worth people, hedge funds, the Michael Saylors of this world, of corporate treasury, beginning of sovereign wealth, mutual funds like New Zealand's mutual funds, retirement funds came in, like, so it sort of hit the big leagues. And now we've got this mainstream adoption happening and very sophisticated, you know, markets that traditional markets are used to. We've got futures very well developed. We've now got ETFs. So all manner of different instruments, options, that's now very mature. So that's not 2017. 2017 was very simple, spot trading. You know, you buy on Kraken, you might start seeing it into Kraken or Coinbase, and then if you were to buy some like altcoins, you would, you know, withdraw your Bitcoins and then you'd buy altcoins with your Bitcoins. And even that's changed because now that's all done on Ethereum, and some of these newer protocols, and that's all done by smart contracts. So all that volume's gone. Like, just the whole behavior is different, and maybe the altcoins are pumping in a bull market like they always do, but it's even that's quite different. And the stuff that is reaching the top 10 is now, you know, legitimately got network effects and people building actually useful things with it. It's completely different. Whereas 2017 is full of, that was like the dot-com bubble, pie in the sky ideas. People were raising money off photocopied white papers. It's a different era right now, and it's like, well, this is our mainstream year where we're across the chasm in the Western world. What is it? Is it 13.5% of the population getting exposure? That's the chasm. And I think the surveys show that in the States, at least, it's well and truly crossed that. And so now we're in the mainstream, and you got politicians talking it down and, you know, disrupt the US dollar as a reserve asset. So even the politicians are bullish on it. 2017 was like geological age past. Bitcoin meets traditional macro. I've learned massive from these kind of traditional macro guys. They all bring like a lot of the Wall Street games and the institutional side of thinking to it. And so I myself have learned heaps, right? And it's been a real education this year.
I mean, the general message is buy the fucking dip, right?
Yeah, I agree with it. I mean, I just see it as consolidation, right? I said that in the newsletter. We're going to consolidate. I said that last dip as well as consolidate. It did. Like, consolidation means it comes down, it tests, and then it moves up without crashing. As it's consolidating, demand's increasing. The hodlers are buying. The speculative guys are they're holding strong for their swing trade, while the hodlers are buying more. So there's not a lot of selling. If anything, we're just waiting for the derivative guys that are just in it for the short futures contract to give up on their long position and then get out of that trade. And then once they're all out, then the price can move up. We're getting quite close. Like, the derivative data I'm looking at is we're probably within a few days away from the next leg moving up. Just need to see the trend continue, but we're very close to that consolidation bottom. undoubtedly a lot of demand, a lot of coins being scooped off exchanges. Tax season upon us, and people are starting to sell down to pay taxes. Also, hedge funds, end of year, they don't really want to do stuff. A lot of traders want to plan for their Christmas holidays. So the fireworks looks like it's really geared to the start of next year. So I feel like we're going to be in this consolidation most of December. I'd be very surprised if we do the Plan B 34,000 green candle in 1 month. I feel like it's going to fizzle sideways. It's a big topic,
Yeah.
and like Bitcoin went through this 2017 scaling wars, and we saw a spike in Bitcoin land, and then we built more efficiencies, and then now we've got layer twos, which are Lightning, and now you've got a nation state using it for payments, and so scaling eventually got solved, and I think scaling will get solved with ETH with their layer twos and like ZK rollups. Don't ask me exactly what that is. I'm not like a coder technologist. ETH is in this very weird situation. It's both a strength and a weakness, is that it's a monetary asset that competes with Bitcoin. There's no questioning it does compete. I know plenty of family offices and even some corporate treasuries that hold ETH. While it's got this monetary policy thing, like this monetary property thing, it's got this other thing, which is it's a smart contracts compute engine where people are building really interesting experiments and products that are useful on it that is demanding block space. I was pushing fees through the roof because of this. And then they've done this thing where they're going to harvest that fee and burn their own token to push the monetary side, to create more scarcity, to push the monetary agenda. So I feel like it's like Bitcoin in 2017, where you got scaling wars and everything's congested, and people are saying bail to Litecoin and shit like that, right? But then meanwhile, you've got a lot of these layer twos that are coming on, and I think they're in a hard place right now, but I think they'll get through it and fees will drop. And then we've got to figure out whether or not they win against Solana and AVAX and Polkadot and all the competitors. And the interesting thing we're seeing is that apps are jumping, right? You can short this thing now. And so as this thing's going into overheatedness, it's very incentivized for you to bring in shorts into the system. And you're not even trading. You can just do the market neutral cash and carry trade. I'll buy some Bitcoin and I'll short it. And as it goes in a FOMO, I collect the massive demand for funding long positions. I'll provide the other side, but I've talked about at least in the past many times, that if we continue like that in this kind of new world of very developed futures markets and ETFs and so forth, probably just continue like the way we have different demand and supply with shorting. We've got a lot of selling down from different infrastructure players. If you think of miners, they're an infrastructure component, and they make money, and then they sell it to realize that money to pay for their OPEX. And the same thing with an ETF. They provide a service, and then they're going to make a fee, and they're going to sell it down. Same with exchanges, futures exchanges, same with Grayscale. So it's all these different demand and supply effects now, and it's a new game.